What is up, everybody? Welcome back to another amazing episode of Fed Watch. My name is Ansel, Lindner. I am here with my debonair co-host, CK. How are you doing today?
Thank you very much for the compliment. Doing very well. 28 days till Bitcoin 2023. We're dropping a brand new cover in Bitcoin Magazine any moment or day now. We're dropping it in a special way. So a little bit constrained in when we can drop based on how we're dropping it. But y'all will have to stay posted. Really excited to see everyone here in less than a month in Miami. Really excited to get my hands on the recent issue or the newest issue of the Bitcoin Magazine. Excited to see Ansel in person at the event. And y'all, I guess a little bit of housekeeping. Ticket prices go up for the Bitcoin conference this Friday. We are smashing our ticket sales goals. So lots of people are jumping in the last minute as expected. Make sure to get your ticket now. Use promo code BMLive to save 10%. And don't wait. A little bit of other housekeeping. Right now, the Bitcoin Magazine Twitter account is suspended. We were going back and forth with them to roll out new Twitter like corporate features. They asked us to make a change in the back end. We automatically got suspended, and now they have not been responding to our emails for the last 3 hours. So that is the reason why it has been suspended. It should be relieved soon, and the account should be back. But until then, follow us on Rumble, follow us on YouTube, follow us on Twitter, on Instagram, TikTok, all the places where you can get content. Bitcoin Magazine is there, and follow us on our podcast app. We drop a Fed Watch once a week, every single Thursday. We review what is happening in macro, what is happening in Bitcoin. We are the only show that has been right about China, right about Europe, right about deflation, ahead on all of this stuff. And a lot of it is thanks to my co-host, Ansel, who provides amazing commentary.
Yeah, lots of updates there about the Twitter thing. I guess more followers, more problems. So, yeah, that's crazy. I hope that gets worked out. So, yeah, you kind of went into it a little bit today. We're going to talk about macro stuff and how Bitcoin, is going to become part of the entire global financial system, how it works in there. But to do that, we need to know what the global financial system is, the players involved, and how it works. So we're going to look at Gary Gensler and his testimony in front of the Financial Services Committee in the U.S. Congress this week. Lagarde made a speech at the IMF, which also is outside Washington, D.C. So that is another thing that happened in Washington, D.C. We're going to take a look at that. And we have some charts, some macro things to look at. So pretty full show. My plugs up front are bitcoinandmarkets.com is my website, and check out the Telegram t.me/Bitcoin and Markets. All right. So that's my stuff up front, CK. Oh, and I want to say thank you to all the viewers over on Rumble. My God, we are killing it over there. So big up to Rumble. We have this competition between Rumble and YouTube, and right now Rumble is just killing it. So like, subscribe, comment, share wherever you're watching this, and help that war going on between Rumble and YouTube. All right, CK, anything else up front?
Yeah, speaking about Rumble, waiting for Rumble to post this live stream on their main page. Let's go, Rumble, get us on there. We are live. Let's pump up the viewers. And to all the Rumble viewers, smash like, subscribe, all that good stuff. We are coming in with the best news in macro and Bitcoin. And yeah, let's jump into the chart. Bitcoin's slipping a little bit right now. You hate to see it, but Ansel, isn't this healthy? Let's kind of go through some of the details here.
Yeah, so if you pull up slide number 1 there, producer Chris, this is the Bitcoin daily chart. And sorry, the neighbors have their lawn service here, so hopefully this doesn't make a big problem. But daily chart, I zoomed out to see this kind of red zone that we've been watching as resistance. Now perhaps it will turn support. If you go to the next slide, this is a little bit zoomed in on this area. Producer Chris, if we go to the next slide, please. So you zoomed in on this area with the 50-day, the 200-day, and then also put the 200-week. And that green box is kind of where some of these different former resistance zones could be turning into support. So we'll see how this goes from here. But overall, there is no like imminent crash indicated on a chart. It is a little bit weaker, less upside momentum than I thought it would have, but overall it's okay. So CK, what do you think about the price over the last couple days and week?
Yeah, I mean, I really want to see us defend 29K and stay above 30K. I think it's definitely healthy to always retest. So I agree with you that there seems to be a little bit of weakness here in the price. I definitely get a little bit nervous when I see us unable to hold 30K for very long.
Yeah.
But we just dipped kind of below this 29K territory. So we'll see if this gets bought up, or if we're gonna have to retest once again.
Yeah, and the sign of a bull market, is patterns tend to break up. Support levels tend to hold more than in bear markets. It's the reverse, right? And so we'll see if this bounces right here. That is a huge sign that the bull market is ready to get going. All right, that's all I have on Bitcoin. The rest
Yeah.
is macro charts,
It,
unless you have
it,
something else.
would you say like this is kind of like Groundhog's Day right here? Is winter over? Is it finally spring, or do we see our shadow, or what?
Well, yeah, if you look back in March there on the chart, right before we broke down to test the 200 day, um, I'm getting feelings like that again. So we could have another dip lower that gives bears an opportunity to put the shorts in. And then when we bounce, it gives an opportunity to squeeze those shorts. So yeah, it's almost like Groundhog's Day.
Yeah,
All
I
right.
got nothing. Let's go to the next
Okay.
chart.
All right. Next chart up is the dollar. So we're going to take a look at the traditional finance system here. And this is a long view of the dollar. A lot of talk recently about de-dollarization, the imminent decline and demise of the US dollar financial system. But you can see that the dollar is much higher than it was just um, 2 years ago. And if we zoomed out even further on this chart, you would see that it's, goes back to the great financial crisis. Really, it's a lot higher. We just continually go up on the US dollar. If you would ask people, these same dollar bears, ask them 2 years ago, they say, oh, there's no way that the dollar can go over 100 ever again. It's dead. It's a dying system. And then, of course, we hit 114. So I don't see any real bad weakness either in the dollar chart. Of course, it could go up or down here, but it doesn't look like it's in any sort of imminent um, demise territory. Any comment on the dollar, or should we keep rolling?
I know no comment on the dollar. You know, we've been watching the dollar a lot here. When the dollar ripped up really high, Ansel, you were the first to flip from dollar milkshake theory to like, hey, we're probably gonna correct back down to the mean. I think that that's happened. You know, we've had a lot of analysis about the dollar in the past. There does seem to be like this new level, like the low is the old high. So you can see the line that you have drawn out there pretty clearly. We will see exactly what happens with the dollar. We will see, if it continues to kind of like flatline here and consolidate at this new level, or if something changes. Obviously the dollar impacts everyone else. It's almost like gasoline, where it's kind of like this underlying price to just doing business. So we'll see. We'll see how it affects everyone.
Yeah, and people have heard the saying the cleanest dirty shirt, and that's what the dollar is at this point. Um, the dollar is not going to collapse before the euro. It's not going to collapse before the Brazilian real. Any of these other currencies. So these all have to fail, and then the dollar will be the last. Also, people discount that the dollar has changed fundamentally many times in its history. So you've had a silver standard, bimetallic standard, a gold standard, a different gold standard, and then now a credit-based standard. So there's nothing really outlandish or out of the ordinary for the dollar to change its backing once again. And that's my big stance, is that the dollar is not going away. It can easily be backed by Bitcoin. And Bitcoiners don't necessarily like that. They don't think that that is necessary, but there's nothing to stop it. And so I think that that will most likely happen. Okay. If
Yeah, I was just gonna add, my good friend and colleague, Mark Goodwin, he is working on a book called The Bitcoin Dollar, and he kind of outlines
mm,
how Bitcoin can become like the world reserve currency while the dollar adapts to adopting it as its background or its backing, similar to how the dollar went from being backed by gold to free floating to being the basis for all energy contracts.
mhm.
This type of just fluid kind of adoption of Bitcoin could absolutely be in the dollar's future.
Yeah, and ultimately the market is in charge. A lot of people don't like to admit that the current dollar system grew over several decades, where people really wanted to use the dollar for their debt, denominate all their debt in dollars. And so it's really a global phenomenon that the dollar was adopted. So wherever we go next doesn't need the okay from the authorities, because the market is really in charge, and they're going to adapt, not Bitcoin. So okay, let's go to, we can skip this one for now. We can come back to that. That's the Ethereum chart. So this is another macro chart. You can see this is the oil price. This is US oil. The most recent gap higher that we had was the uh, production cut from OPEC Plus. It looked like it might break out. It looked like this might make some difference, but now over the last couple of days, it has been falling pretty dramatically, and that gap is about to close. Overall, I think if you add up these two production cuts, 3.6 million barrels per day, that's significant. All right. And if there's a 3.6 million barrel per day cut, yet the price continues to fall, it's very heavy here. You're fighting gravity to go up above this. What does that tell you about the demand out there for energy? Overall, I think the global economy is slowing quite dramatically, and there's just not enough demand to keep this price up. Any comments on this, CK?
It's been the thesis on the show for a long time. Deflation is what's happening. Lack of cooperation is what's happening, and you can see that starkly in the price of oil as cuts. In the face of cuts, they're constraining supply in order to manage the price, and demand is just not keeping up.
Yeah,
The demand or lack of demand is outstripping or outpacing their ability to make cuts.
right. And the market always tries to heal itself, right? So if the price of oil is dropping, the market needs it to drop. It's a balancing, it's a balancing act here. Well, if they artificially prop up the price and stabilize the price, they're actually going to destroy more demand. So by cutting production, they actually make the gravity on this chart even stronger. So I think that's an interesting way to look at it. Okay, that's all like kind of the macro stuff I had, other than the interest rates. And CK, these are some of your favorite charts. So let's go to the next one, number 6. And we don't look at this very often, but this is the 4-week Treasury bill with the Fed funds rate, the target range, the stair steps. And look at what's happened over the last week and a half. It has just dived straight down. I think it's a 1.5 percentage points below the Fed target now. I mean, this is incredible for the 4-week. I mean, why would someone buy the 4-week here instead of going to reverse repo where they can get 4.8%? They can get 4.8% by going to the Fed repo facility, or they can go to the market here and get 3% for the 4-week. So if we go to the next slide, this also has the 4-week, but it's showing a different picture here. So the 3-month has not begun to dive yet, and we will see. So whatever's happening in the marketplace, my kind of thesis here, my idea is that something has broken. There's some scared investors out there, and they're fleeing into the 4-week Treasury, the smallest, most pristine Treasury that you can get. But that demand has not spilled over to the 3-month yet. So we'll see. And then on the next slide is the one that CK really likes. This is all the longer bonds, the 10-year, 5-year, 30-year, and 2-year. And you can see they're all the way down, way below the Fed funds target range. They really haven't budged at all. If you go back a couple weeks with the Signature and First Republic and some of those other bank problems that we were having, it looked like this might break down even further. You can see the 10-year kind of came out of this gray zone that I have highlighted, but now the 10 years back inside of that. And it just kind of looks like it's found an equilibrium right here in the market. So, CK, any comments on what I've showed here on the interest rates or anything that you have heard out there in the last week or so about interest rates and stuff?
This is still the most important chart in macro. I think it is what most clearly shows the relationship between rates and the Fed funds rate. I think it's super interesting to like on our end. We've been kind of tracking the longer term has been more aligned with breaking out of what the Fed is trying to do, while the shorter term has been able to kind of stick a little bit more tightly with the Fed funds rate. It's really fascinating to kind of see on the complete other end, the shortest time frame now beginning to kind of like bleed out of the range, while let's just call it like the slightly longer term, 3 month bond, which is still very much a short term bond, but not as short term as the 1 month bond or the 4 week bond or whatever you want to
Yeah, yeah.
call it. That's still kind of staying tight. So we're seeing things fall apart on the long end, on the long duration as well as the short duration, and we're kind of seeing like it all like squeezing the middle.
Hmm.
So it'll be really interesting to see, when all of these products start to break out of what the Fed is kind of projecting.
Yeah, and one of the things about these rates, so you kind of pulled it apart there a little bit, teased it out, is the longer rates are supposed to be about inflation and growth expectations. This is what the market expects for inflation and growth going forward, longer term. And the short term rates price in more of Fed expectations, Fed policy expectations. So if we have the 4 year or the 4 week crashing, that means the market might be seeing something that is imminent that's going to make the Fed pivot, right? And so, yeah, we'll be watching this very, very closely. It's one of these charts and one of these topics that we have watched constantly on the show. And mainstream economics can't explain this. That mainstream, like they asked many years ago, what is about 20 years ago now, they asked Alan Greenspan, how do you explain the yield curve? And he's like, oh, it's just a series of 1 year forwards. So the 5 years supposed to be just 5 years of the 1 year rate. And then of course that can't explain inversions. They have no idea how to like academically explain what a yield curve inversion is. And that's the state of the central banks, that their understanding of what's going on. Okay, so that's all I have here on this. I have one more chart though. You might have seen this floating around, CK. If we go to the next slide, this is total deposits of commercial banks, and this is a year-on-year change. You can see that during the Great Financial Crisis, that thicker gray area, it kind of dipped below or started falling. Deposits started falling, or at least the rate of growth of deposits started falling. But now this is negative. I mean, this has been all over the place. Lots of macro people are talking about it. Deposits are shrinking, which is outright deflation. So CK, have you seen this chart, and what are you thinking when you look at this?
I mean, what a wild chart. As far as I'm concerned, this is proof that there is massive interference that's happening right now. One, you can see like the massive spike in 2020, which we have been observing on the show for a long time, how unnatural that was. And now it's like an equally violent kind of reversion back in the opposite direction. And as you can see, this is unprecedented. This chart goes all the way back to 1998. So, in recent monetary history, we've never seen this kind of swing at all, not even close. And it breaks the chart. Like it's difficult to even contemplate, how this is, the second, third, fourth order effects of this kind of a change.
Yeah, this is what I mean when I talk about transitory. Okay, so a lot of people were saying, "Oh, we're going to have higher inflation for longer," and just a handful of other people that I follow, macro commentators, were saying that no, this is going to be transitory. And now people laughed at us. They said, "Oh, no way, this is going to be transitory. You don't understand. The Fed has printed so much money." And now look at this chart. It's showing that it was transitory. Everything is coming down. Last week when we talked about CPI and PPI on the show here, that shows transitory nature as well. So yeah, once again, I'm not worried when I see this chart. A lot of people are worried about recession, but if you look at the area under the curve in 2020 and 2021, I mean, we have a lot to make up, so that this line can go pretty far down below the into contraction and still come out net positive. I hope that makes sense to everybody, but there's a lot of room, a lot of excess to get worked off in this chart. So this doesn't
Yeah,
worry
can we
me.
just explain that a little bit more? Because, a lot of times, like, the way in which these charts are measured can be pretty confusing. Really, what this chart is supposed to show is, like, compared to last year, what
Mhm.
is the growth looking like? So when you have such a massive spike up from the mean that happened in 2020 and 2021, you can afford to have a pretty massive kind of return to the mean without actually going negative per se. Is that accurate, Ansel?
Yeah, you can think of it like an individual. So my bank account balance is growing by 5% a year. All right. In 2020, it grew by 20%, or in 2021. Now it fell by 5%. So I'm still way ahead of where I would have been. And so there is still a lot of slack that can be taken out of this chart. Now, overall, in the long term, this is a neat chart too, because it shows this idea that credit must continue to expand. So either you can pay your debts or you can't pay your debts, right? So credit always has to continue to expand little by little every year, or else you face a deflationary bust. So right now, that's all the different topics that I'm thinking about when I look at this chart. I don't know how else to explain it.
I mean, it makes a lot of sense. Can you talk through, this inflationary bust for folks who haven't been hearing you talk through this thesis really quickly?
Yeah, so the modern monetary system, the dollar, the euro, all the currencies out there, they're based off of debt. So they're not backed by nothing, they're backed by debt. And so if you, with the way you print money is a commercial bank makes a loan. These are, so this chart is exactly measuring the money creation that has happened. However, when you print money that's debt, you it's not unencumbered. So one of the things that I have been talking about for a long time is if you want to print money, you add units to your balance sheet as an asset only. But in current money, what you do is they add an asset and a liability, so they offset each other. And the implications of that different type of printing of money creates a whole different system. And then that, to understand where we're going in the future, you kind of have to understand, okay, well, there's these business cycles where credit expands and then you have a credit bust. Then you go back in the business cycle of expansion and then a bust. Well, now put that to a global size bubble, what we've seen since roughly World War II, or we can go forward to 1971 or so. We have entered a worldwide business cycle and we're on the downward slide in that. So the end of this is a deflationary bust of credit, not an inflation, runaway inflation. So that's my main thesis of all of my analysis that I do. And if you look at the world that way, man alive, it starts looking very good. Like you can predict things very, very closely just by switching that little difference in the way you view things from, oh, the Fed is printing money. Actually, they're not printing money. The banks print money. Money is credit. And I mean, I think Bitcoiners and gold bugs and sound money people, they're wired to understand this. They just don't want to let go of this idea that the Fed prints money. So there, how's that for a summary, CK?
I think it was a good summary. Can you tell me how there can be deflation and monetary debasement at the same time?
Okay, say that one more time.
So we are experiencing the declining purchasing power of the dollar.
Mhm.
Maybe against other fiat currencies, that is not the case. But ultimately, it feels as though the world is getting more expensive. that feels as though there is debasement in the dollar itself. How do
Yeah.
you square this idea of deflation and devaluation or debasement of the dollar simultaneously?
Okay. So, yes, money is expanding, the monetary supply is expanding, but in the beginning of a credit bubble, the new unit of money is highly productive. So I take out a loan for $100 and it's 5%, but I can use that $100 to make $200. It's highly, highly productive at the beginning of the credit bubble. But as the credit bubble expands and you get more and more indebted, each marginal unit of credit becomes less productive. And so, yes, the supply of money is still increasing. However, the debt burden and the returns that you get on that debt is too high. It becomes negative. So you actually get shrinkage of the global economy, even though you have some new currency units being printed. And like I said, every new currency unit is encumbered. That means it eventually has to be paid off. And so that is how we won't have runaway inflation, because everything eventually has to be paid off or defaulted on. And what happens when you pay off a debt or you default on debt, that money is actually extinguished from the money supply. So hope that cleared it up a little bit.
No, definitely. And I just like to ask the stupid questions, Ansel, because not everyone listening has been listening to the show for 2+ years. And there's some unpopular opinions here. There's some contrarian opinions here. We do think that we are ahead of the curve here on Fed Watch. We think that we have, been a narrative in front of the actual narrative that is kind of populating. We've been at least a narrative ahead. And some of these ideas are difficult to square, especially when the smartest people are saying inflation, inflation, inflation every single day when they're talking about why the dollar is failing.
True. Yeah. And I don't do that enough because we are Rumble is killing it with the new viewers. So yeah, we have to explain our stances because we are the contrarians kind of out there in Bitcoin. Okay. So the next topic, are you ready to go on to the next topic, CK?
Oh, let's rip it.
Okay. This is Gary Gensler in front of Congress. And there was a lot to be said out there on Twitter about what happened here yesterday. And a lot of people are happy that he got grilled. They thought, oh, I can't believe this is happening in Congress. But anyway, we have some highlights and we're going to talk through this and get our reactions. So producer Chris, we're ready for the first clip. This will be the McHenry clip.
Ether is one of the most popular digital assets and powers the Ethereum blockchain. Back in 2018, then SEC Corporation Finance Director Bill Hinman stated that he believed Ether was not a security. Last month, CFTC Chair Benham expressed his view that Ether is a commodity. The State Attorney General of New York asserted in a court filing last month that Ether is a security. Clearly, an asset cannot be both a commodity and a security. Do you agree?
Actually, all securities are commodity under the Commodity and Exchange Act. It's that we are excluded commodities. But I would agree that a security cannot be also an excluded commodity and an included commodity. I'm sorry, Chair, just to talk about the Commodity Exchange Act more precisely.
Okay, so do you recognize, how would you categorize Ether then?
Look, I think that the general sweep of what Congress did, not just in the 30s, but as amended.
I'm asking you, sitting in your chair now, to make an assessment under the laws as exist. Is Ether a commodity or a security?
Without speaking to any one.
I know you've repeatedly said you're not going to speak to one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000. If there's a group of entrepreneurs in the
asking
middle,
about one.
The public is anticipating a profit based on the.
I'm asking you a specific question, Chair Gensler. I said this in private. This should be no shock to you. I'm asking this question. Is Ether a commodity or a security?
And again, it depends on the facts and the law, and if there's a group of individuals.
I'm asking you about the facts and the law sitting in your seat and the judgment you are making.
And so, Mr. Chair, I think you would not want me to prejudge because I'm also.
But you have
aware-
prejudged on this. You've taken 50 enforcement actions. We're finding out as we go, as you file suit, as people get Wells notices on what is a security in your view, in your agency's view. I'm asking you a very simple question about the second largest digital asset. What is your view?
And my view is if there's a group of individuals in the middle that the public is
All
anticipating.
right, so let me just ask a second question.
All right, so we paused it there. They go on a little bit more, but CK, what is your reaction to this?
Oh man, it was a lot of drama there. That was exciting questioning by a Bitcoin stalwart in the Senate, McHenry. But I think that I have a pretty nuanced position when it comes to shitcoins and altcoins and Ether in particular. My position is that it is a DDoS on our regulators, and that they are not equipped to deal with the DDoS that is shitcoins, and that ultimately what shitcoins do is they actually kind of like they create this contrast with fiat shitcoins that kind of shows that makes them all the same. Anyone can issue a shitcoin, really. No one can issue Bitcoin. So as Bitcoiners, we both kind of want to root for the DDoS of shitcoins to distract politicians and distract regulators to some degree and take them down. But simultaneously, it is really difficult to push forward Bitcoin advocacy without getting looped into all the security BS that is associated with the shitcoin industry. And I personally think that Bitcoin advocates as well as lobbyists need to be focusing on Bitcoin exclusively and not tie in any of the kind of massive attack vectors that are associated with crypto and altcoins and Ethereum. You know, Bitcoin being a security is not a subject matter that we need to argue over. The government and the SEC changing its laws or creating new laws in order to create an opening for the rest of the crypto industry is also not necessarily something that Bitcoiners need to be focused on. So I know that was a kind of a wide-ranging answer there, but it was just talking about, is Ether a security? And ultimately, I think the SEC, they need to come out and say, yes, all of these things that are in crypto land still follow within the existing jurisdiction of the SEC, and they need to try to be consistent. And if they're not, I think that is a crack in their credibility. And they have many, many, many cracks in their credibility. And regardless, again, folks like McHenry, like, he shouldn't be wasting his time with the crypto lobby. He shouldn't be wasting his time talking about securities. Yeah. He should be focused on Bitcoin. He should be focused on proof of work and self-custody.
Yeah, all great points, man. The DDoS attack on the regulators, yeah, that's a great way to look at it. My reaction listening to this initial clip that we just played is it seems so staged. And at the end there, he even said, we talked about this in private beforehand. I'm going to ask you right now, blah, 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 blah. So they obviously talked about this. Gary Gensler obviously said in that private conversation, sorry, I can't give you specifics on the floor of the committee, yet McHenry pushes him on it anyway. And I think that there is this, it almost seemed staged, and it seemed like trying to win political points. The crypto lobby, as it were, is probably fairly powerful in Washington, D.C., especially for some of these committee hearings. These representatives or senators might get a list of questions from lobbyists from the crypto industry. And so I don't know, it just seemed very staged. And yeah, I'm ready for the next clip unless you have anything to respond to that.
Hey, you are better at sniffing out some staged BS. Ultimately, all of fiat is a massive stage. Just look at the president of the United States, who has a stage in the White House where they do staged appearances. So the whole thing is staged. The whole thing is expectation and impression management. It's all about forward guidance. None of it is authentic, or most of it shouldn't be assumed to be authentic. So great point. Let's go to the next clip. Let it rip.
Second question then. Do you think it serves the market for an object to be viewed by the commodities regulator as a commodity and the securities regulator to be viewed as a security? Do you think that provides safety and soundness for the product? Do you think it provides consumer protection? Do you think it serves the value of innovation? I think no should be a very simple answer for you here.
I think
that uncertainty is bad, is it not?
And I think that Congress has said that there's one agency, the Securities and Exchange Commission, under this committee.
And you won't answer my question, and you're the head of that agency. So give me a break. Come on.
I'm answering it in the generic because you would not want me to speak about any one set of facts and circumstance.
Okay, so, but you've already spoken. Have you said anything about Bitcoin?
My predecessors and the agency itself has spoken to that.
Okay, but you're not willing to do the same about Ether. Okay, so let me just step back. There's a lack of clarity here in the marketplace. Can you at least agree to that?
I think that the clarity is there. The law is clear.
All right.
There's a group
so
of individuals
let me be explicit about this. The market doesn't see it. Your regulatory actions and the CFTC's regulatory actions say that there's a great deal of uncertainty here. It is the intention of this committee to fix that uncertainty and actually provide a sound legal basis for this. Ether is one.
All right, so that section was about uncertainty in the marketplace, clarity of the rules and all of that. Of course, Gensler couldn't get into specifics. There's ongoing litigation, many ongoing pieces of litigation on these companies. And so he can't really speak to these things. And McHenry knows that. So again, I think this is a little bit of grandstanding. However, when he asks about clarity and uncertainty, I'm not uncertain. I'm not unclear. It's been clear for a very long time that all of these things are unregistered securities. So CK, what's your reaction?
Yeah, I mean, I think it's been clear that these are dubious investment vehicles for a very long time. One of the reasons I personally became a quote unquote Bitcoiner or Bitcoin maximalist is because I was new to the space in 2017. I was lucky enough that I'd seen what venture funding looks like in Silicon Valley. And I was able to be like, wow, these ICOs are raising an order of magnitude more than a legitimate Silicon Valley startup with no product and a shitty website. Like, there has to be something wrong here. What's wrong with crypto? And the only people talking about it were my man Ansel Lindner, Tone Vase, the World Crypto Network, and it was Bitcoiners who were like speaking in plain English, that were not getting all confused and dragged down by the hype. And they were focusing on what is actually in front of us. And I would push back, again, McHenry is a stalwart for Bitcoin. You do not have to be a stalwart for crypto, Patrick. Mr. McHenry, you do not have to be a stalwart for crypto, because here's the reality. Yeah. The only one creating confusion are all of the crypto-friendly politicians, lobbyists, and publications that continue to spin that we need a completely new asset class for what is effectively securities anyways, for scammy securities anyways. So there's very clear for a long time what a illegal security is, what an unregistered security is, is a security. It is a contract where you're expecting return based off someone else's success or someone else's work. So all of these things, appear to be that. I'm not saying that accredited investor rules are correct or securities rules are correct, but there's tons and tons and tons of clarity. All of that has been very, very straightforward. And it really is the Bitcoin and crypto lobby together, not the Bitcoin only lobby, but it's we are all friends. We're all part of the same nation lobby. That is who is creating the confusion, and that is who is putting kind of weird expectations on the Securities and Exchange Commission.
Great points. You took the words out of my mouth on a few of those things. Yeah, it is the the crypto bros and the scammers that are creating the confusion, and they're not willing to accept the clarity that the SEC has given them. I mean, they've been pretty clear. The Howey test is pretty darn clear. You just don't want to accept that you all fit within the Howey test, right? So that's where I think the confusion comes from. But Emer, this next clip is I think he's the majority whip.
Wait,
in
real
this committee.
quick.
Yeah, go.
Before we get into Tom Emmer's clip, someone posted low quality take. So I just want to kind of explain the take a little bit more. Look, all of us, neither Ansel and I are statists. Neither of us think the SEC or any of these investment laws are legitimate. But to say that illegal, or let's say what is clearly investment contracts don't fall within the existing law, I think is a little whack. It's a little off base. You know, you could say the law is illegitimate, but to say like we need new laws for these investment vehicles, I don't think makes sense. And ultimately, you know, the way that Bitcoin was created was in an ethical way where there is not trust on someone else's performance, and that is important here. That is part of the financial literacy that is being taught to the world, is that you can't just create an investment contract and call it money, right? That ethics, that morals, that honesty in the creation of money is also valuable in the product itself. So it's about the entire story. And it's not that these laws are what we must abide by, but we need to abide by what is actually, you know, ethical, honest, monetary technology. And that is Bitcoin. And that's why Bitcoin, because it is ethical, is built in a way that makes it safe from regulatory attack vectors like the SEC.
Yeah, exactly. There would be no need for decentralization if, you know, there was none of these regulators. Like, the reason why we are decentralized, or Bitcoin is decentralized, is exactly because you realize that there are bad people in this world. You don't just get to say, oh, you're being bad, stop being bad. Like, that's not how an altcoin should win this battle, by saying, please don't be bad to me, bad guy. No, that's why we have decentralization in the first place. We don't like the bad guys, but we realize there are always going to be bad guys, and that's why we're Bitcoiners. That's why we understand decentralization. Decentralization is not something to make a coin more efficient. Okay, decentralization is highly inefficient. The reason you have decentralization is to keep away from the corruption, to keep away from the central party that can corrupt the system, that can change the monetary policy, that can do all this stuff. That's why you have decentralization, to keep the bad guys away. So we are Bitcoiners because we realize they're bad guys. These altcoiners just want to, you know, they want to make nice with the bad guys so that they won't hurt them. Well, guess what? The bad guys are coming for you, altcoiners.
So next comment here is Bitcoin will thrive with all of crypto. If the SEC hurts these projects, BTC will suffer. Maybe. And I think that BTC could suffer in the United States because of poor regulatory action. But that does not hamper BTC in the long run. And it does not hamper, it actually makes Bitcoin a much more resilient system, because guess what happened in China when they locked down exchanges? Well, all exchange went P2P, and that's exponentially more difficult to stop. So these centralized altcoins that have centralized leadership and teams that actually stand them up, they're much more vulnerable here. And again, we're not rooting for the SEC to take these things down. If anything, I'm just pointing out the fact that the government cannot actually live up to their mandate, and they cannot protect investors. They're completely ineffective in doing so, and the SEC actually is being exposed by the DDoS that is all of these illegal crypto securities that are being flooded into the market. But ultimately, the Bitcoin can take short-term pain. That, I think that's the point, is Bitcoin is actually anti-fragile. Bitcoin is actually decentralized. Let's jump to the next video. I know we're running out of time here, and we got 2 more videos to hit on. So, and we got to talk about the U.S. as well as Europe before we're over. So let's jump to the next video.
5 minutes.
Thank you. Chair Gensler, I have a lot of questions and a limited amount of time. So if you could keep your answers
to either a yes or a no. That will allow us to get through as many as possible, sir. From your perspective, is it more difficult now for the digital asset industry to access financial products and services in the United States than it was, say, 2 years ago?
Sir, I'm not running one of those businesses. If they came into compliance, I think
Reclaiming my time. The answer, sir, is yes. Do you think you and the SEC have had a role to play in that?
I think we have a role to protect the American investor and the capital markets. And
Reclaiming my time, sir. You have played an obvious role in that. During your tenure at the SEC, how many rules has the SEC finalized that actually accommodate the existing regulatory framework and are specifically to the digital asset industry so the crypto market can come into compliance?
It's our rule books that are on the books for years, so we have not finalized any new rule specifically with regard to crypto. We've proposed some things in best execution. We've also...
Sir, reclaiming my time, the answer is 0. And how many enforcement actions has the SEC levied against digital asset companies during your tenure, sir?
I think it's probably 40 or 50.
The answer, sir, is about 55. My understanding is that the biggest crypto failure in history is probably FTX at $9 billion. Were you the chairman of the SEC when FTX collapsed?
Yes.
And how many times did you meet with FTX prior to their collapse?
I think my public record shows 2.
You met with FTX at least twice. And arguably, the second biggest crypto failure in history was Terra Luna. Who was the chairman of the SEC when Terra Luna collapsed, sir?
We had brought...
You were, sir. Reclaiming my time, you were. There are 5 members on the commission. Do you believe your speeches and interviews are to serve as the official position of the SEC?
I can only speak for myself when I'm speaking.
Again, sir, in a statement on the SEC website, you are quoted saying, the Kraken staking as a service enforcement action should make clear to the marketplace that staking as a service providers must register. But again, you haven't provided any rules for how that can be done. I must remind you, your public statements are not regulations. It's not responsible to expect the American people to assume your statements are a substitute for rules.
Okay, he covered a lot of ground there, but you can tell that he was being very confrontational. A lot of the crypto bros out there were saying, oh my God, he really gave it to Gary Gensler, and this is so awesome. But really, to me, once again, it seemed very staged, and I didn't see any big gotchas. Of course, there has been clarity out there. There haven't been any new rules. They're just trying to apply the old rules. So at least we can say that. That's good that the SEC hasn't created any new rules. They're just trying to apply the old rules. And then the last thing I noticed there was he said, okay, you tell them to go and register, but there's no rules on how to do that. Well, so what? Nobody has ever been able to register as a security in the history of the United States? No, you're not special because you're an altcoin. You are just a run-of-the-mill centralized security. So don't wish for any special treatment or any special new rules. You are an unregistered security. So CK, what's your reaction to the first section there?
Yeah, I mean, I do really enjoy how Tom Emmer, tried to play the bad cop with Gensler. It was entertaining to watch. Again, that's what all of these things are about. It's about entertainment effectively. None of these agencies or committees protect consumers. I'm very confident of that. And if they do any protection, they also do quite a bit of harm as well. So yeah, I agree with you. It does seem like it was more or less a show. Maybe they even hugged it out after the fact, being like, hey, I didn't mean to ruffle your feathers so hard there, buddy. I bet that was something that maybe happened in that case.
They had a beer at some DC bar.
Yeah, I mean, who knows? Hey, that's why we have the BTC Policy Summit that is happening next week in DC, is to try to educate some of these staffers and politicians about why Bitcoin. But yeah, I mean, hey, ultimately, I think the SEC, is an inefficient organization that is not staffed to meet the demands and the pressure and the work that has been put upon them over the last 4 years because of the DDoS that is the shitcoin ecosystem. And I don't know if it's a good or bad thing that they have been lagging on the Bitcoin ETF. I tend to think it's actually a good thing. I think everything is good for Bitcoin, and that just forces more and more people to actually take their own self custody rather than using a trusted third party. But yeah, I mean, is Tom Emmer focused on just Bitcoin with these questions? No, he's focused on the illegal securities industry that is associated with crypto, and he's upset that there's a lack of legal clarity. I'd be more upset with the fact that legitimate Bitcoin businesses are being discriminated on the banking
Debanked,
level
yeah.
because they're taking fiat payments from a business that might have BTC or Bitcoin in the name of the business. Like, that's discrimination that I would be pissed about. Obviously, if Coinbase creates a illegal securities exchange offshore, that's their own decision. And I know there's rumors about that as well. Like, should I be heartbroken that kind of activity is made illegal in the U.S.? Maybe. Ultimately, I want the U.S.'s financial system to be challenged. So I'm okay with there to be a little bit of stress there. I'm okay with some of these solutions to offshore. But even still, I don't even think offshoring is actually going to relieve them from having to deal with U.S. regulators these days, just because U.S. regulators, especially on the financial side, seem to want to police the entire planet.
Yeah, great points. I want to just go right into this next clip, and I want to preface this by saying, notice how Emmer says he knows the clarity. He just is unwilling to accept it. So, producer Chris, we're ready for the last clip.
Does it concern you, by the way, that your approach to the digital asset industry is actually driving this industry out of the United States?
We're trying to drive it to compliance, and if they're not complying with the laws, then they shouldn't be offering their products.
Reclaiming my time. Madam Chair, I would like to enter into the record this Wall Street Journal article from April 14th, 2023, detailing China's ploy to open its banking system to crypto firms in an effort to seize an opportunity created by our hostile regulatory environment, which, Mr. Chair, you're a big part of.
Without objection.
Chair Gensler, FTX was domiciled abroad and so is Binance, yet American consumers still had access to both. You can't really think that pushing this industry abroad is going to protect American consumers when it hasn't several times in the past on your watch. You say the crypto market is rife with non-compliance. However, existing SEC rules make no sense for blockchain-based companies, and following them would actually kill these businesses. Your regulatory style lacks flexibility and nuance, and as a result, you've been an incompetent cop on the beat, doing nothing to protect everyday Americans and pushing American firms into the hands of the CCP. Your intention to work against SEC mission and put American investors in harm's way has been made very apparent, sir. It's been a year and a half since you've appeared before this committee. You need to answer to Congress about the issues that you've had with the SEC staff union, the work environment you've cultivated at the SEC that's led to hemorrhaging of senior staff, the intellectual inconsistency of your regulatory treatment towards Bitcoin spot ETFs, and your politicization of capital formation opportunities through your treatment of certain SPACs. And that's just to name a few.
So yeah, he's in there about halfway through. He's like, following these rules and regulations would actually kill these businesses. Well, yeah, but you're saying that you're unwilling to accept the clarity that was given. So very interesting. A lot of show and flowery posturing there, but I also thought of Nolan's Count BTC and his take that there is going to be this is going to be a huge issue in the upcoming election season. So I think that is dead on. CK, what about this last clip?
I mean, I agree that it's going to be a growing topic. I think that fiscal, fiscal responsibility is something that I've been listening to a lot of folks outside of strictly the Bitcoin space have been talking about being a a very, very big, important issue in the 2024 election. People are kind of sick of the print money to fund programs, as well as the disruptions to daily life that are kind of coming with an encroaching and less approachable financial system, as well as increasing prices due to political instability. So, I think that fiscal responsibility is going to be a big topic, and that is just going to shoehorn into all of these new age financial products, which are crypto and Bitcoin. I really do think that Bitcoin is going to be one of these top issues. I know we only got 3 minutes left, so I'm going to shut up. And we have a
Yep.
whole segment that we want to talk about Europe. So, Ansel, I'm just going to hand it over to you.
Okay, so Chris, there you go, perfect. So Lagarde made a speech. I think it was, let's see, the 17th. So that was about 3 days ago, and it's very, very interesting because it parallels a lot of what we have been saying here on the show about how there is a breakdown in the international order, the international rules-based order. You probably have heard that term before, but what does that mean for central banks and things? If we go to the next slide, I don't have time to do this really justice, but I wanted to pull a few real quick items out. So this is kind of the feeling of this piece here is the global economy has been undergoing a period of transformational change. We are witnessing a fragmentation of the global economy into competing blocks, with each block trying to pull as much of the rest of the world closer to its respective strategic interest and shared values. And this fragmentation may well coalesce around two blocks led respectively by the two largest economies in the world. If you go to the next slide, they're talking about the rules-based order that's going away, and then they start talking about supply shocks. If you go to the next slide, sorry guys, audience, I'm zipping through these. So they talk about the supply shocks and how we're going to have to regionalize supply chains, and that's already happening. After last year's war between Ukraine and Russia started, that the share of global firms planning to regionalize their supply chains almost doubled to around 45% compared to a year earlier. And I'll add that that's going to increase. We see a lot of friend shoring as well. It might not be regional, but Apple is moving stuff out of China and to India, right? So there's a lot of that type of, diversifying political risk that's happening. So then they continue here. If global value chains fragment along geopolitical lines, the increase in the global level of consumer prices could range between around 5% in the short run and roughly 1% in the long run. So that's a little bit low, I think, but they're saying that in the long run, quote unquote, inflation or prices will tend to rise. If we go to the next slide. This is the policy frameworks. So this is starting to get into what the central banks can do. So if they're faced with persistent supply shocks, independent central banks can and will go ahead with ensuring price stability, but this can be achieved at a lower cost if other policies are cooperative and help replenish supply capacity. This is kind of the opposite of what we expected from the globalist central banks. You know, Lagarde is the president of the ECB, and are they going to give up on all their climate stuff? Are they going to give up on all their energy policies if they want to keep prices in check, these supply crises in check? Next slide. For example, if fiscal and structural policies focus on removing supply constraints created by the new geopolitics, such as securing resilient supply chains or diversifying energy production, we could then see a virtuous cycle of lower volatility, lower inflation, higher investment, and higher growth. Recognizing the interdependence between policies, not the independence. So they don't want to compromise the independence of the central banks, but they want to recognize the interdependence of these policies. And next slide, I think this is the last one I have here. So how central banks navigate the digital era, such as innovating their payment systems and issuing digital currencies, will also be critical for these currencies ultimately which currencies ultimately rise and fall. This is an important reason why the ECB is exploring in depth how a digital euro could work best work if launched gradually and then suddenly. So overall, though, on this whole entire speech that she gave, she mentioned credit, the term credit, and debt 0 times. 0. She mentioned inflation 16 times. She mentioned deflation 0 times. So 0 times did she talk about credit, debt, deflation, the actual worries of the world right now. I think they're starting to identify the proper cracks, like where the cracks lie, but they don't understand quite yet that this is a credit problem, this is a debt problem, this is a deflation problem. So, CK, any comments on this? I know we ran a little bit overtime here, but do you have any quick comments to wrap it up?
I mean, no real comments to add beyond your analysis. I think it's like great analysis. These people are out of touch, and even when they come slightly into touch, it's too little, too late. So we need to get away from them ultimately. Yeah, I mean, hey, she did speak some truths there. She did kind of like align with reality to some degree, but I'm sure there's still a decent amount of kind of illusions that she's trying to kind of spend, and expectation management that she's trying to spend. These people, they do not speak the truth unless they're forced to, based on even worse realities coming down the pipe.
Yeah, excellent. Okay, so that's all we have for today, guys. I want to thank the viewers. Make sure you like, comment, and subscribe to wherever you're watching this. For me, check out bitcoinandmarkets.com. Also, the Telegram is t.me/Bitcoin and Markets. CK?
Y'all, it's been a great show. The Bitcoin conference, go to it. BM Live for 10% off. Ticket prices go up this Friday. Keep an eye out for the newest issue of Bitcoin Magazine. The cover drops very, very soon, I promise. Peace.